Fundstrat Global Advisors head of research Tom Lee is with us at Post 9. Great to see you, T. Welcome back.
Great to see you guys.
Your line lately has been zigzag, at least for the going into year end, right?
Yes.
Meaning what?
Well, I think that, as Sarah was discussing, the market's hyper-focused, especially interest rates, on inflation versus growth data. I think it's going to be kind of conflicting. Today was a good inflation print. Next week could be strong jobs because of the UAW rehires. And then we don't know what November CPI looks like. So I think the market will sort of zig and zag until the FOMC. And that's when I think we see there's so much breathing room to make a dovish pivot. I mean, inflation's dramatically undershooting, and higher for longer isn't really what Fed talk is anymore. So I think we get a dovish conversation, and that fuels the year-end rally.
So you're a buyer on any dips, is basically what you've been saying.
Yes.
And you got a great catalog of what you call granny shots, which are no-brainer, basically, decisions. Is that list changing and evolving somehow, broadening?
Yeah, we rebalance every quarter, but we also do something every month called Super Grannies, where we do a webinar with our clients and highlight it. Last month's CRM, Salesforce, was actually one of our Super Grannies, and it's obviously having a good day today.
Yes.
Yeah. But year to date, it's up over 25%. Each of the last 5 years, it's beaten the market by almost 400 basis points. So,
do you expect the chop to get tougher after the new year?
I think December tells us what 2024 kind of looks like. So I think if it's choppy this month, next year is going to be a tough year for investors because they're going to get whipsawed. But, for the path of the markets, we're going to publish our outlook on December 7th.
I was just going to say, wait, is Tom Lee not bullish? What's happening?
You'll have to find out.
I'm going to take a guess. You're going to stay bullish.
Well, there's only two options, right? It's A or B.
Yes, that's true.
When was the last time you were bearish?
Well, first half of 2022, we said it'd be treacherous, so we were bearish there. In August, we said the markets were going to be tough this year, and so for the next 2 months, markets were tough. So generally, it's been a rising market, but you got to be a little tactical. And I would say, in retrospect, people have been holding on to a bearish view too long. In fact, I think they've anchored to a bearish view that's been expensive this year to have a bearish view. I mean, give you an example. Market's up 20% this year. Retail equity flows to the stock market are negative $240 billion. It's never happened. How would people
What
liquidate
explains that, then?
Well, it shows you that stocks recalibrate off interest rates and on expected monetary policy, but flows generally is a tailwind. It was a huge headwind this year. Well, when things align, what can markets do? It can be really powerful. I think this is a year where it just showed most people got it wrong.
Do you think that when it comes time for rate cuts, whenever we get there, that it is a sign of impending danger? Or can it be a more gradual, benign cut cycle the way Waller kind of laid out earlier in the week?
I think Waller's view will prevail if inflation was transitory. And I think that's what it's increasingly looking like because we're seeing a huge deceleration of core inflation. If you took out nursing services this month, core was printing 0.07. It would almost round to zero on core. Nothing's happening to drive this down. It's just that goods, which was hitting services like insurance premiums, that's all starting to disappear. And now we're getting back towards 2%.
The only cautionary note I'm getting lately is that holiday spend on a credit card spend basis, given that core goods are basically flat, is pretty solid. And that you couple that with whatever Chicago PMI is telling us and whatever OPEC's doing, that you might get a little bounce, no?
Yeah, you could. And also, there is bonuses paid for UAW workers coming back, so you might get a December sort of spending lift, but I think it's all a head fake. And I think ultimately, I don't think inflation expectations are rising, and I don't think wages demands are growing. And I mean, to get to a wage inflation spiral or an inflation spiral, you need something de-anchored, and it's pretty well anchored.